Hello, everybody, and welcome to this flash update podcast on the capital rotation process or the capital rotation event. If you're not too familiar with what that means, take a look at the knowledge base article that does explain it in some detail. But in very simple terms, capital rotations occur every, I don't know, every 20 years or so, something like that. It varies. But a capital rotation process is where we identify through our technical analysis when capital rotates away from stock markets towards golden commodities or away from golden commodities towards stock markets. So it's sort of the ebb and flow of capital away from risk on and risk off assets, if you like. And a lot of that is to do with the geopolitical environment that's going on in the background and attitude to risk and all that kind of thing. So this chart was one of the first ones, money supply to gold, which helped us to identify that when the chart is plunging, it means that money supply is underperforming gold, and that happens during gold bull markets. So we identified the chart breakdown back in 2023 below the moving averages in the Ichimoku cloud and the support line, and suggested that that this chart was indicating that gold was going to go up very significantly. And at the time, gold was around about $1,600, and of course we've risen very significantly since that by well over $1,300. Another chart here is the US dollar index versus gold, and it helps us to this one helps us to identify the capital rotation process as well, because when the chart is plunging, that means that gold is outperforming the US dollar index. And US dollar index is a measure of the strength of the US dollar. So what it really means is that the strength of gold is able to outperform the strength of the US dollar. And that happens during strong gold bull markets. As you can see, gold rising hundreds of percent when this chart moves down significantly. And we've just broken down. And so the suggestion is that gold will rise hundreds of percent. Gold versus CPI. Well, gold has broken out versus CPI very decisively through the resistance line. And put the candle chart on if you like, and you can see the wicks on the candles. If we put it onto the line chart, it just draws the chart based on the monthly closing price. If you put the candle chart on, you get all of the price action that occurred during each month. But yes, we've broken out very decisively, and this chart is moving up, which means gold is outperforming CPI. That is suggestive of a capital rotation event. Gold versus PPI, and this particular chart works very well on the quarterly time frame. So put it on the quarterly for you, and you can see very clear and decisive breakout through the resistance line above the moving averages in the Ichimoku cloud. Gold is therefore expected to rise hundreds of percent according to that chart. Looking at currency in circulation versus gold, currency in circulation has broken down versus gold, and as you can see, that happens when gold is in a huge bull market. Gold moved from 2001 to 2011-12, and this chart plunged as gold rose hundreds of percent. And the same thing happened, as you can see, in the 1970s there, when gold rose thousands of percent. This chart plunged as gold was outperforming currency in circulation. Okay, the equal weighted S&P versus gold, very, very decisive breakdown for this chart, which means that gold is outperforming the equal weighted S&P. Capital has rotated away from the stock market and towards gold, and we're expecting 5,000 and then let's say $10,000 gold. Gold versus the New York Composite Index. This chart is rotating in an upwards direction, which means that gold is outperforming the New York Composite Index, just as it did back in the early 2000s when it broke out down here in 2002, 2003, and then it consolidated and broke out again. So this chart moving upwards is supportive of a huge precious metals bull market. When the chart rotates in the opposite direction, it's in favor of stock markets. So when the chart reaches a high point and rotates downwards, stock markets are in favor. And then you can see really what's happened here is the chart reached a low point and rotated upwards. And then we've had a consolidation, really. This is nothing more than a pause in an ongoing huge bull market. That's how I would characterize that. The Dow versus gold, well, a very decisive breakdown. Signal number 4 on the Dow gold ratio. You can see signal number 1 was back in 1930 the chart broke down and we entered a huge precious metals bull market. The same thing happened in the early 1970s. The chart started plunging and then gold doubled, and then it doubled again, and it doubled again, and it doubled again, and then it doubled again. And during that time, the S&P fell 50% and took 10 years to get back to the point where it started. In the early 2000s, the S&P fell 50% and took 13 years to get back to where it started. And during that period, gold doubled, and then it doubled again, and then it doubled again. So huge bull market move. And now the chart is breaking down again. So the chart is shouting at us and saying gold is going to double, and then it's going to double again, and it's going to double again. So that's a huge bull market indicator. The Wilshire 5000 has broken down versus gold, and when this happens, the chart falling, that means that gold is outperforming the Wilshire 5000. So that's another indication of capital rotation. The Russell versus gold gave us an early warning. We issued that early warning for you. The chart has broken down very decisively since the early warning. So the early warning is now in the rear view mirror, and the chart is plunging. It is quite literally plunging now. So you can see historically that the chart can fall very significantly in quite short spaces of time. And that is when the point of recognition arrives, and investors around the world will be looking at the same charts and thinking, oh, hang on a minute, why am I holding capital in the stock markets? And one thing leads to another, and before you know it, you're in a gold bull era and a stock market bear market. Nasdaq now breaking down versus gold. You can see these critical support is just on the verge of being broken here. We're below the 4-year moving average there. We're below the Ichimoku cloud now, albeit just below the Ichimoku cloud, or right on the base of the cloud. So once critical support fails, then we are into a gold bull era. And you can see what happens when this chart is in a dropping phase. The chart fell during the period from 2000 through to 2011-12. The Nasdaq fell, I think it was something like 84%. So tech stocks prone to huge losses when this happens, and gold is liable to rise by hundreds of percent. This is gold versus the S&P. So breaking out and breaking upwards. So gold breaking out versus the S&P is suggestive of a gold bull era. Now turning to the Mag 7, this is Tesla versus gold. Looking like a bear flag here. We are below the 4-year moving average in the Ichimoku cloud. Sometimes I use the 3-year moving average, sometimes the 4-year. Doesn't really make too much difference. Gold has a 4-year cycle, so that can be quite useful when you're using gold ratio charts. Amazon versus gold breaking down. This is an important one because it's got a very clear critical support line there, and we are breaking down. If I zoom right in, Amazon breaking down versus gold. So if it gives a clear monthly breakdown signal, just adjust that line upwards a little bit. If we get a clear breakdown signal on a monthly closing basis, then very strong evidence of a gold bull era. Google versus gold looks weak. If I just zoom out a little bit, you can see we've formed what to me looks like some sort of topping structure here. And the chart is breaking in a downwards direction at the moment. Regardless of that, we are not bullish on Google unless we were to break out above that resistance line at the top there. But that isn't happening at the moment. Chart is moving to the downside, so that is not good for Google. Apple versus gold appears to have stalled out, breaking down below the key rising support line there. If I just pop it on the candle chart, you can see that that support line broken down, back tested. We're not making higher highs here. Looks very prone to a breakdown to me. Looks like again like a topping structure. Microsoft versus gold, and I'll just put this on the line chart so it's a bit clearer what the price is doing. You can see a very clear breakdown there. We've broken down below the rising support line, below the 4-year moving average, below the almost below the Ichimoku cloud now. So Microsoft in the process of what looks like a breakdown versus gold. Meta versus gold. Well, is it stalling out here? This is one of the stronger looking charts in terms of tech stocks versus gold, but that's a huge expanding megaphone pattern there. So if we fall below this zone that I've highlighted, where you'll find the moving averages in the Ichimoku cloud, the 3 and 4 year moving average are in here, fall below that and much lower targets come into view, and that would not be good for Meta, but it would be very good for gold. Nvidia versus gold has broken down very decisively, and you can see, well, I've previously highlighted that if we were to break down, we would be likely to see a 66% decline. And then if that support level fails, then it would be disastrous for Nvidia. But at the very least, I would expect a 66% underperformance here. So Nvidia versus gold, if it were to drop all the way down to that support zone, then it would mean that Nvidia has underperformed gold by 66%. And looking at the nominal chart for Nvidia, a nominal price drop of something like 70, 75% seems entirely possible. Just if we split, let me just quickly whiz through some of these charts and pick out the ones that are most interesting. This is if instead of looking at gold versus S&P, if we turn the chart the other way up and look at S&P versus gold, this is how it looks. So when the chart's rising, the S&P is outperforming gold, and when it's breaking down, gold is outperforming the S&P. And we are getting a critical breakdown here. The CRE confirmation would come on a monthly close below horizontal support, below the Ichimoku cloud, below the 4-year moving average. So let's wait till the end of the month before we draw any major conclusions from this. But if this continues, then we could be staring right down the barrel of a capital rotation event confirmation. We've also got NASDAQ versus gold in here somewhere, if I can find it. You're probably spotting it well before me. Let me just go down. So I've got NASDAQ versus inflation versus SPX, NASDAQ versus M2. Why can't I see it? Oh, we've done NASDAQ versus gold. Okay, so yes, sorry, we looked at it further up. So it'd be gold versus NASDAQ would be the other way of looking at that, which we probably don't. Ah, there you go. Yes, that's the chart I was looking for. Okay, right. Ignore my ramblings. So many, so many charts, it gets a little bit confusing sometimes. But this is, yes, if we look at the now we've looked at NASDAQ versus gold, but this is gold versus NASDAQ. So again, taking the same ratio but flipping it upside down. And in this configuration, when the chart breaks upwards, it means that gold is outperforming NASDAQ. And that's what you want to see it do in a capital rotation event. You can see the previous breakout here. The chart broke out, moved up, and that was a capital rotation event. And gold massively outperformed stock markets for 10 years. So what's happening now? We've got very clear confluence of evidence here. We've got the 4-year moving average, we've got the resistance line, we've got the Ichimoku cloud, and not much higher above, we've got this horizontal support and resistance level as well. So a clear and decisive move here to the upside would be telling us that a capital rotation event has occurred, and we are now entering a gold bull era. Okay. Exciting stuff, isn't it? Okay, now the S&P sectors, there are 11 sectors in the S&P, and when they all break down versus gold, we have a capital rotation event. Okay, all the ones with red flags now, as I speak at this moment, have broken down versus gold. So I think it was 7 of the 11 before. It's now 10 of the 11. So the only one that hasn't really broken down versus gold is this one. It's communication services versus gold, but it is close. It's very close to breaking down. Doesn't have as much price history as the other sectors, but we are below the 4-year moving average. We are below the Ichimoku cloud, and we're very close to that rising trend line, rising support line. I can put it on the candles for you like that if you like. So that's my best estimation of where the breakdown would occur, because if we move below that, we will be below the moving average, below the cloud, below the most significant sort of rising support level. Okay, now we'll move on to consumer discretionary versus gold. So consumer discretionary has literally just broken down versus gold. I'll pop it on the candles, pop it on the line chart. There's a little bit of subjectivity as to how you place this support line, it's more a zone of support. So I've drawn a double line, but that's my best estimation of where support lies. We are way below the 4-year moving average, way below the Ichimoku cloud, and support is failing. XLP, which is consumer staples versus gold, very clear breakdown. So consumer staples are now officially in a bear market versus gold, under the 4-year moving average, under the Ichimoku cloud, and under horizontal support. XLE is energy. This is a little bit trickier to sort of identify the breakdown, because the whole thing is in a decline versus gold at the moment, the energy sector. We are below these double horizontal support lines, below the Ichimoku cloud, below the moving average. So the conclusion from that is that we are in a bearish phase versus gold. Notice that during the last gold bull market, but the thing dropped, the ratio dropped for the first couple of years in the gold bull market, but then it rose quite rapidly. So during the gold bull market, energy had its time to shine. Energy, of course, being one of the sectors that in a precious metals bull market is likely to outperform at some point. So energy actually outperformed gold for a while, and then it went sideways versus gold, and then it dropped again. And towards the end of the precious bull market, the ratio was sort of back to close to where it started. So what you get really is a period of underperformance and then a period of outperformance. So it'll make a lot of sense if energy dropped, or this ratio chart dropped to the support line, let's say by 2026, well, by next year sometime, and then began to bounce and rise. And that would suggest that the time to be invested in the energy sector would be from sometime, perhaps the middle of next year onwards. XLF, what is XLF? Well, XLF is financials, and financials are breaking down versus gold. So we need to keep a close eye on the banks. And if you watch the weekly Market Roundup podcast, you'll know that we do keep an eye on the banking sector via Bank of America. So we're going to keep an even closer eye on the banking sector moving forwards, because financials are breaking down versus gold, below the moving average, below the Ichimoku cloud. And if I zoom right in, if we get a monthly confirmation of that breakdown, then it's game on. XLV is healthcare versus gold, and healthcare, very clear breakdown taking place versus gold now, below the 4-year moving average, below the Ichimoku cloud, below the horizontal support line. We've got industrials versus gold breaking down, below the moving average, below the Ichimoku cloud, and below the rising support line or support zone. Materials versus gold breaking down. So below the Ichimoku cloud, below the moving average, you know the drill. XLRE is real estate. Real estate is plunging versus gold, and it's just about to arrive at the support line. So it's going to be interesting to see if real estate can develop any upwards momentum versus gold later on this year or into next year, or whether it just continues to break down, or perhaps goes sideways. We don't have data going back to the previous gold bull market from this particular sector, but we can look at housing versus gold, and I've done that before on previous charts. But it's true to say that this chart is very much in a bear market versus gold. XLK is technology, and this is the big one, because if technology breaks down versus gold, then Nasdaq will break down versus gold, and it's a done deal. And you know, that's where the capital rotation event confirmation comes. Really, this is the important one, because of the huge sums of money involved. I mean, just Nvidia and Microsoft alone at one stage were accounting for about 7 trillion market cap. So with Nvidia and Microsoft, if they were to drop 50, 60, 70%, then you can imagine the impact that would have. And this chart is now displaying every sign of a clear breakdown. I've marked it with a red flag here, but I would actually like to just see this drop below the Ichimoku cloud to really justify that red flag there. But we're below the 4-year moving average, and the 3-year moving average for that matter. We're below the Ichimoku cloud, we're below horizontal support and resistance, and we're below the rising trend line there. I'll just put the candle chart on so you can see this trend line, double trend line, which is a support zone. And you just have to use a little bit of common sense as to where you place these support lines and support zones, because it is subjective, which is why the objective evidence of the moving average in Ichimoku cloud is very, very important to factor in. Finally, utilities versus gold. Utilities have broken down very decisively versus gold. Did do a while back, in fact, but we've now broken below horizontal support and resistance, below the 4-year moving average, below the Ichimoku cloud. So to summarize, gold has effectively destroyed everything that I've just been talking to you about. Everything is breaking down versus gold, and this is the classic signs of a gold bull era that you move into when a capital rotation event takes place. This capital rotation process has been ongoing for years. As you can see, the whole breakdown process, we broke down on this chart, for example, then we bounced off support and we back tested, and then we broke down again. It's all a process. It doesn't happen overnight. This goes back to 2020. And that's when a lot of these sort of, it's when a lot of this stuff started, really. That March panic in 2020, you can trace everything back, really, to that point in time. And that's where we moved from one era into another. And the last 4 or 5 years have been digesting that transition from one era to another. And we are now at the point of recognition where the markets are really going to reflect and price in everything that has been going on over those last few years. So it's a culmination of all of the stuff that we've been showing you, certainly since the website started. So we're going to grab this by both hands. We know that gold is got, all of the evidence is suggesting that gold is going to double. It's going to double again. It's going to, I can say this till I'm blue in the face. I've been saying it for the last 3 or 4 years now. How you allocate your capital is entirely up to you. But what we're going to do for you is we're going to highlight for you the points in time when stuff outperforms gold. So, you can have all your capital in gold, you'll do great. But if you want to do even better, you can allocate some of that to silver when silver breaks out versus gold. You can allocate some of it to platinum when platinum outperforms gold, the miners when miners are outperforming gold, different sectors like uranium or lithium or zinc miners or copper miners. All of those things we're going to highlight over the next few years for you when they break out versus gold, so that you can make those decisions to shift some of your NAV into those sectors if you so wish. But if you just want to be aware of when the gold bull market is drawing to a close, or when the big corrections are most likely to happen, then again, we are going to do that for you. We're going to highlight that for you with the technical chart analysis and the ratio charts, and all of our potential trades are going to go into the tab in the trading hub for the SRS. So take a look at that. Look at the metrics tracked or the instruments tracked in the SRS section, and those are all the trades that are going to be teed up for trading. We're not talking about investing here. The investment advice is covered in the roadmaps, and it's also covered in the TNS big picture section. So if you want to know, for investment guidance, go to the TNS big picture, read our roadmaps, listen to my weekly market roundup podcasts. If you're wanting the trading signals, then the trading signals are issued by the TNS on an automated basis without human intervention, based on an automated algorithm. And the SRS signals, trading signals, are going to be issued. The signals will be generated automatically, but based on our own manually derived entry and exit points. So 2 different systems. If you're not entirely clear about those, then go back to the Knowledge Hub and read about the SRS and the TNS so that you can understand the differences between the two. And as I say, also be very clear yourself whether you're looking to trade or whether you're looking to invest this precious metals bull era. Okay, a lot for you to digest in that. You might need to play it back once or twice just to re-listen to some of the things that I pointed out there for you. But in the meantime, stay tuned for more details of the capital rotation event as it unfolds, and we it's quite an exciting time to sort of live through this whole transition, but it's hard sometimes to keep up with the pace of what's happening. But we'll do our best to do that for you. Okay, enjoy the rest of your day today, and speak to you all again very soon. Bye bye for now.